All right, so let's talk about my trades this week. It was really depressing. I'll tell you why. The reason it's depressing is, like I mentioned in the title, I went from 635 profit US, net US dollars, and the last two trades really wiped everything. I lost $653 on the last two trades. So my total for the week net is $92 loss. So that's what was depressing, is that I was having a very good week, and then just two trades wiped out everything, which really hurts. And if you look at the gross, so before commissions, I'm actually up $113 before commissions. So the reason I'm down is because commissions are too high. I spent $200 on commissions this week. Now, just for fun, let's just see if I had done 10 contracts. Let's just see the effect of commissions. So if I had done 10 contracts on everything, and of course if I had, anywhere I did two, then I would do 20. My net would have been profitable. My net would have been $400 US. So that goes to show that commissions is played a big difference this week. Not only commissions, of course, but things could have been better if I had much lower commissions. In fact, if I just let's say I had no commission at all, I would have been profitable. It still would have been a depressing week because I would have gone from $790 profit to only $113 profit. So the trades were still bad, but commissions, of course, hurt me even more. So I had a Netflix put spread that I opened for $1, closed for 30. Can't say anything wrong about that. An Etsy put spread at 120 put spread, opened for $1, closed for 35 cents. Really can't complain there. Zoom opened for $1, closed for 34 cents. And I'm actually glad I closed them. I don't regret not holding them to expiry, because honestly, some of them, if I held to expiry, would have been even bigger losers. So it was a good thing this week on some of my trades. It was a good thing that I closed them, but I closed them for better than 50%. So I'm not disappointed. This one was $200 on Amazon. I closed it for $65, and this I closed it before earnings as well. So that's how profitable. That's how good the entry was. I was able to close some of these trades before earnings. Etsy, I closed it before earnings. Amazon before earnings. So Tesla had a 393.85 put spread for $1, closed for $25. So more than 50% profit. TWLO was an earnings trade. Did not get the best entry. Collected 90 cents, closed it for 45 cents. So I closed it for 50%. So obviously because of the commission, I only end up with $32 net. Nvidia opened it for 90, closed it for 50. So not really 50%. But I was worried that the market would drop. So this was a good thing, actually. It's a good thing that I closed it, because I would have lost if I held it till expiry, because Nvidia closed at 500. Microsoft was an earnings trade, but I actually got out before earnings, and a good thing I did. 85, closed it for 45, and I think Microsoft ended up closing below 200 or very close. Yeah, it closed at 202.5, so it would have been very stressful. But yeah, this one could have collected an extra $45 if I held to expiry on this one. So not a big deal. SPY, this one I closed for a profit, and good thing I did. SPY ended up at 326. Lululemon, I closed for a profit. This was the next day. This was a good trade. This is a one-day trade, really, from $1 to 43 cents. Can't complain, really. So a lot of good trades, a lot of good entries. It's just sad to see that two trades wiped me out. Now was an earnings trade. Opened for $1, closed the next day for 15 cents. Shopify was an earnings trade as well. Opened for $1, closed for 28 cents the next day. Although I had a hard time closing it. The bid and ask was wide and nothing was getting filled. It was very weird. Shopify did not enjoy. It didn't make sense. The spread didn't make sense. But regardless, I was able to close it for 28 cents. And actually, Shopify went to 1060 pre-market and then kept dropping when the market opened. It reached 990 the same day, when in the pre-market it was at 1060. So it made no sense. Regardless, I'm glad I got out of this one, because Shopify ended up closing it at 920 or something. So that sometimes it is better to close, as you could see, especially if it's worth it. I mean, it's not 20 cents or 15 cents is not worth it to hold on to the trade and take risk. MasterCard was, so this was a bad entry to begin with. It was an earnings trade, but I got in too early, and MasterCard kept dropping before earnings was released. So I got in at a bad entry. And then on top of that, MasterCard dropped a lot. It reached 280 the next day. So I wasn't able to collect much from the call spread. So I collected only 80 cents from the call spread. So total credit is $1.70. Max closing price is $5. So max loss was 347 with commission. So this one really hurt me, but this is because of my bad entry. Maybe I shouldn't have played MasterCard. It didn't have that high IV anyways to begin with, so I should not have played it. Q, I think it had decent IV, but I didn't get a good entry because yeah, I think it did not have high IV because when this got filled at $1, it was a put spread to begin with. When this got filled at $1, I think Qs were at 279, so I was only 4 points away. So I think this was a bad trade to begin with. And then the next day, I had a chance to close it for 60 cents. So I collected $1. I had a chance to close it for 60 cents. I didn't because with commissions, it would eat up all the profits. And definitely the next day, I regretted it because it dropped to 271. I sold a call spread. So you can see here, I collected 47 cents from the call spread. That's why you've got $1.41 here. And then that same day, I sold a call spread at 280, 285. That same day, it went to 279. But then obviously on Friday, it opened at 277. I had a chance to close the trade for about $1.60, $1.70. I thought about it for a second. And then when I saw Qs at 277, I'm like, maybe I should hold on to it and maybe it'll be a winner because it's trading right in the middle. But then the Qs dropped completely down and went below 270, went to 268. So I closed my call spread. That's why there's a minus 6 cents here because I closed my call spread thinking that maybe if it rebounds, then I just have to deal with the put spread. Instead, it kept going lower, it didn't come back up, and so the put spread became a loser. And I paid $4.34 to close the whole trade, which was just a put spread at this point. So this was a $305 loser. So as you could see, 2 bad entries, maybe bad management as well. Because I had a chance, I should have maybe, when I see something that's tested, not too comfortable with, I have a chance to get out of break even as if I didn't do the trade to begin with. Maybe I should have done that. So I think this is bad management. This is bad entry. I could have avoided these losses. And AMD was just for fun. It was a very small max loss, so I didn't care about it. It was an at the money put spread on AMD when it dropped after earnings. It was at 78, 77. Collected 50 cents, risking 50 cents. And then AMD dropped, so I sold a call spread. So that's where the 26 cents comes from. But then on Friday, I had a chance to close it for 77 cents. So I had a chance to close for break even almost. I didn't go for it. And instead, I ended up closing it for max loss. So I paid $1 to close it. So $73 loss. So this also could have been avoided. So all these could have been avoided easily. These two mostly. But these two was just curiosity and greed. Wanting to see maybe if I will win or not. And this here was a bad entry. So this is probably caused because I just want to play more entries. I just want to have more trades. So just trying to force trades basically. So this is how this could have been avoided. And this could have been avoided by maybe telling myself if something feels wrong, too close for comfort, just get out of it as for break even. But then I wonder if I have that approach, would I have avoided some profits over here? So Netflix never got tested, Etsy never got tested, Zoom never got tested, Amazon never got tested, Tesla never got tested. This one came close, but I closed it. Nvidia came close as well. Microsoft I closed because I was bothered by it. SPY I closed. The thought process here to avoid these would not have affected me on these winners. So I think I'm gonna try to apply this mentality for future trades. If I'm not comfortable with a trade and I have a chance to get out for break even, I should take it. Even though I've seen that sometimes going to expiry ends up a winner. And the other key here is to get better entries. Only focus on high IV stocks. So to get better entries to begin with. But I mean, playing earnings, this is a risk with playing earnings because it can go anywhere after earnings. You don't have time to manage the trade. I could initially start with a 30-day trade instead of a same week trade so that I have time to manage. But if it's a winner, sometimes I'm not able to close it even if it's a winner because there's still 30 days to go. The volatility crush sometimes is not enough for me to close the trade. And so I end up holding it till 30 days. And the more you hold the trade, the more crazy things can happen in the market. So a potential winner becomes a loser. So for example, Google, for example, which was at a 1520 put spread, where let me show you Google because I ended up rolling it. So right here, this one initially was same week. This one was November, not November, but October 30th expiry. Ended up moving it to November 20th. Now Google ended up having good earnings. The stock went up. So I should have been able to close this even though it was November 20th expiry, but I wasn't able to. So now I'm gonna end up holding the trade till November, but Google dropped from 1660 to 1620 on Friday. Who's to say that between now and November 20 doesn't drop below 1520? And then this potential winner of a trade becomes a loser. So yeah, this is what happened last week, and now I've got a bunch of trades for next week. So for November 6th expiry, I've got all these trades. I almost got into a SPY put spread for November 6th at 305.300. So I almost got a 305.300 put spread for, I think it was 90 cents. And then the expected move on SPY dropped a little bit. It was $18 at the open on Friday, and then dropped to like $15. So I wasn't able to get that. So I ended up not placing the trade. So these are my trades right now. Hopefully they can become winners. We'll see what happens next week. I really hope this one becomes a winner. I'm worried about this one. And ZM, we'll see. Nvidia, Adobe, BIIB, MasterCard. Yeah, this one's a loser for sure. There's nothing to do really with this one, unless I get lucky and MasterCard jumps to 317. But that's not gonna happen. So this one's a loser. This one we'll see. Boeing, we'll see. Visa, we'll see. Amazon should be fine, but I might sell another put spread lower on Amazon. Netflix, it's close, but I could sell another put spread. I'm confident in Netflix. This one I hope will be fine. 430 on ZM is pretty far. Shopify should be fine. Lululemon 300, Spotify 220, and Tesla 360. I might sell some call spreads against some of these trades just to mitigate the risk and collect some credit just in case the stock continues to drop. Usually I wait for the short strike to be breached, but I might start selling some call spreads on Monday just to mitigate against these trades. All right, so these were my disappointing trades for last week. So if you have any questions, leave them in the comments section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.